So if you remember everyone, in the last class, we discussed about how we can actually solve a normal NPV question, right? That is what we have discussed in the last class. We talked about tax part, we talked about working capital, we talked about revaluations, and everything were considered in the last class. So I guess it would be better if we start with one numerical today rather than directly going to the APV or the other part. So let's do one question which relates to the FM part, everyone, and definitely after that you guys will be solving one more question onto very similar area. Okay, so Agbono is considering, let's start this question which is based on net present value concept, the topic of which we discovered in the last session. Agbono is considering a potential project with the following forecast details. We have initial investment, we have the disposal proceeds, the demand is given in year 1, 2, and 3. Selling price per unit is expected to be 100 and variable cost is 30. Both of the figures are given in today's terms. Okay, not a big deal for us. Okay, tax is paid 30% 1 years after the accounting period. Working capital will be required equal to 10% of annual sales. This will need to be placed in the start of each year. Okay, tax allowable depreciation is 25%. Fine. Company has a required rate of return 6.8%. Okay, so a lot of details were already given. Let's start this question starting from here 0, 1, 2, 3, and 4. One more year I'm taking. I'll do one thing for the ease of calculation, everyone. I'll put down units over here. My demand was 5, 10, and 6. Now, what is the sales? What is the sales of my company? It is given the selling price is expected to be 100. Okay, one thing. But remember everyone. Last lines. General inflation is 3%. Selling price is expected to inflate at 4% everyone, right? So now we have to increase the value over here 1.04 raised to the power 1. Again we'll multiply, sorry, it needs to be 1 multiplied by the value. I'll do one thing, I'll put this power in bracket so we won't get confused. Command R. You just need to drag it in the ACCA exam. What you can do, you can drag it. For ease, I'm just putting Control R for my easiness, everyone. But in the ACCA exam, you have to drag it. So now we have the sales. After sales, variable cost. Now variable cost is 30 per unit. So again, same thing. 30 multiplied by bracket open. What is the inflation? 5%, 1.05 raised to the power 1 multiplied by the number of units. Again, drag. Right. So now we have this much net trading flow or net profit, cash flow, whatever you want, because I don't see any other thing being tested over here. Control R. That is the first point. Now can I put initial investment, which is almost given as 1000, negative 1000, and my sale proceeds are given as, okay, now one thing everyone, let's put sale proceeds as well 200, and now we need to notice one thing, that is your tax allowable depreciation, TAD. For that I'll do a working, I'll put down working 1. Now working we can prepare over here as well. It's just for ease, otherwise in the ACCA exam you need to prepare over here. But I just want everything to be in the same screen. That is why I'm using the part over here. workings. Working 1, tax allowable depreciation. Okay. Now tax allowable depreciation, what is the value at start? Then depreciation, value at end, tax benefit. Now what is the value at start? 1000. What is the depreciation being charged? 25%. This amount multiplied by 25%. What is the value at end? This amount minus depreciation. Then what is the tax benefit? Sir, whatever is the depreciation multiplied by what is the tax value? Tax is paid 30%. 30%. Now scrap value at the end of year 3 is given. This is year 1. Similarly, we can calculate for year 2. Right? We have year 2 as well. But can you notice one thing, everyone? At year 3, when the value is 562, my value at end is supposed to be 200 only. So what will be the depreciation amount? This amount minus this amount. Why I'm doing that, everyone? It says very clearly in the question that the value at end will be 200. Value at start is 562. So what is the depreciation that I'm supposed to charge? 362.15. And then I'll get the tax benefit as well. So now one more important point. The tax benefit I'm getting 1 year after the 1 year in arrears. So year 1 ka tax benefit I'll get in year 2. Correct? This is the tax benefit that I will get after that particular year. Now one more working needs to be prepared, everyone. That will be your working capital will be required equal to 10% of annual sales. So I'll put down working capital. Over here we'll have to prepare working again. W2. I'll come over here, I'll put down W2, which will be working capital. Now working capital may 10% of annual sales. So first of all, why don't I take up the sales part? I can simply copy paste it. It will be easier for me, right? So now sales I already have. It will be 10% of annual sales. Total working capital required. So year 1 may whatever is the sales, that will be required in year 0. So 10% multiplied by 520. Similarly, 108.67. This is the total working capital which is required, everyone. Are you getting my point, everyone? Total working capital. Now, we can say one thing. 10% of annual sales, this will need to be placed in the start of each year. Everyone. So what is the total working capital required in each year? Let's place it. If you want, you can see now working capital may either you place it on that year, because see, this is not the important part. Important part is what is the difference which is required. So now I'll put down what is the net working capital which is required. Year 0 may, so we'll require the full amount only. Simple. Then year 1 pay, what is the extra amount that we require? This much. Year 2, what is the extra amount that we require? This amount minus. Okay, so we are going to get some money back in here. And then in year 3, we'll get the whole amount back. So this is the best part of, this is how we are supposed to solve this question, everyone. Okay, so now we have the net working capital which is required. I'll come here over again. I'll put down a negative because working capital is a investment. Again, I'll put down a negative investment. I'll get some money back. And even over here, I'll get the money back. So I'll just directly take the positive. Okay, we can directly take the positive in here. Or just to make sure that everything is in line, you can take negative here as well. So now the working capital requirement has been considered. I don't think we are left with any other cash flow. So can put down net cash flows. So total this plus this. Over here we have net trading inflow plus your working capital. Over here we have trading inflow plus your tax allowable depreciation benefit plus the working capital that we are getting. Over here we will have net trading inflow plus sale proceeds plus TAD plus working capital that we are going to get back, and then tax allowable depreciation. Everything is almost considered. Can we go for the discounting factor, everyone? Now, so general inflation is given. The company has a real required rate. Again, real required rate is of no use to me. So I'll come to the working theory and I'll put down nominal rate calculation. Not even nominal rate is fine. Or I can just put down discounting factor. We all know the formula for nominal rate, 1 plus n, which is equal to 1 plus r. What is the 1 plus r? What is the r given? Is the r given, everyone? 6.8. So I'll put it out 0.068. 1 plus r multiplied by 1 plus h. So multiplied by 1 plus h. What is the general rate of inflation? General inflation rate to be 1.031 plus h. Whatever we are getting. So n will be equal to this amount minus 1, 10.0004%. So simply we can say 10%. Simply 10%, everyone. Over here I can put down NPV directly, equal NPV, bracket open, rate ko I can put down 10%. I can take all the values, close the bracket, and then I can add this one as well. Okay, so there comes a problem over here. Certain times I've noticed this as well. Control C, equal NPV, bracket open, 10%, comma, take up all the values, bracket close. Now just take the difference. Over here you put down present values and now you put down net present values. This amount plus this amount. So my net present value will come out to be 610. I feel like that's too much of a present value. Okay, any doubts, anyone over here? Oh gosh, yep. One thing that I guess we forgot, everyone. We took down the tax allowable depreciation, but okay, I messed up actually. Uh, Tax payment, right? We forgot the tax payment over here after tax inflows. We talked about everything and we forgot the tax payment that needs to be considered. So again, the tax will be paid after 1 year. And what is the tax that is supposed to be paid everyone? 30%. So what is the net trading flow? This amount multiplied by 30%, and it should be negative everyone. So R. Now net cash flow may we need to add this thing as well. We need to add this thing as well. To add this thing as well. Now this looks, now the NPV looks closer. Got it, everyone? This is how we are supposed to solve this question of the net present value. Actually, this was something which relates to the financial management part. But before we move forward, I just wanted to give you a summary on how we are supposed to solve this net present value numerical. So I've shared one question with all of you guys. It's a 12 marker question. Now, as per ACCA, for 12 marks, we will get how many minutes, everyone? The timing is very important, and I want you guys to solve it over your laptops, Excel only. Don't use anything else, everyone. Use your laptops. So generally we get 21 minutes, but because you guys are AFM students, I feel like 18 minutes would be more than enough for all of. Okay. So let's do another question based on the very same concept of financial management, everyone. This question is almost the same thing, but yeah, it includes way more items than what we have already, than what we just solved about. Okay, so let me just show you the question once. Hebac company is preparing to launch new product in the market which is outside its current business operations. The company is undertaken market research and test marketing at a cost of 500,000. As a result of which it expects the new product to be successful. Okay, that's not important for us. Forecast sales volume is given, selling price is given, variable cost is given. Selling price and variable cost are given in the current price term. Before taking the inflation, 4% in selling price and variable cost inflation is 5%. Okay, understandable. Incremental fixed cost 500,000 per year in current price, and the inflation will be 8% per year. Okay, got it. The initial investment cost of the production will be 2.5 million payable at the start of the first year. We'll see at the end of 4 years because the product is expected to have become obsolete due to the new technology. The product equipment would have a scrap value of 125,000 in the future value terms. The investment in working capital is given. Working capital inflation is 6% per year, and working capital will be recovered at full. Okay, I don't think there is anything new. Corporation tax is given as 20%. Tax deduction is given at 25%. Then WAC is given, or after tax WAC is 8.5. Okay, great. So pretty simple question, to be very honest, everyone. I'll take up, since the values are given over here, is it okay if we solve? No, we'll solve it over here only. 0, 1, 2, 3, 4. But I'll take up units prior to that. What are the units for each sales volume? From every number, I'll remove triple zeros. From every number, 200, 800, 900, 400. But whenever you do this thing, just put down at the start of the question only in bracket, all amounts are in triple zeros. Okay. So I'll come to the sales. Sales in year 1 will be equal to 200 multiplied by, what is the selling price? 15. Let's do one thing as well. I'll put down selling price and I'll put down variable cost. Selling price will be 15, 18, 22, 22. Variable cost is 999. The variable cost is not required. Okay. Sales will be equal to units multiplied by, bracket में I'll put down selling price multiplied by, what is the selling price inflation, everyone? 4%, 1.004 raised to the power 1, bracket close. So the first one would be 3120. Okay, now I just need to drag it. I don't need to do anything else. I just need to drag it, everyone. It made things very easy for me. Coming to variable cost, it will be equal to what is the units multiplied by what is the cost? 9. Bracket I'll put down 9 multiplied by 1 point. What is the inflation over here, everyone? Inflation is given as 5%. 1.05 raised to the power 1, bracket close. I take up all the values. So now we are done with sales and variable cost. We'll get we have fixed cost as well. It is up to you. You can calculate contribution, then go to the fixed cost, but it is not compulsory. I can direct take fixed cost as well. Fixed cost is given as 500,000 per year, and it is in current value terms, in current terms. So 500 multiplied by 1.08 raised to the power 1. Can you do one thing? Just bold it so that it will make things easier for us. 540, 583, 680 and everything is there. Then we'll put down taxable cash flows because everything has already been taken care of. Sales minus variable cost minus fixed cost. Control R. Then we have after taxable cash flows, what is the taxation? Taxation is paid on that year in the year in which it arises. Pays corporation tax 20%. So this amount multiplied by 20%. Okay, 138. Ab yahan pe I want to put it negative, but see, when I'm solving the question, when I'm just putting down the plus and negative sign over there, I do it. So it's not a compulsion for me that make it negative, make it positive. It's completely up to us. But yeah, the examiner actually likes if you put down all the things that you are going to subtract as negative and all the things that you are going as a positive values. But it is still not a compulsion that you have to follow. Then we have tax allowable depreciation, and we all know that it will be a part of working W1. So now we'll come over here and working I can solve over here, right? What is the value of TAD? Can I go and copy paste from above? Copy paste. I'll copy it from above. What is the value at start, everyone? New production will be 2.5 million, so 2,500. At the end of 4 year, okay, have a scrap value will be 125. What is the depreciation? 25%. This amount multiplied by 25%. What is the value at end? This amount minus this amount. Tax benefit will be this amount multiplied by what is the tax rate? 20%. Okay. Similarly, what is the value at end? This value, and can we just drop it to the year 4? Drop this till year 4. Value at end of year 4 will be 125. So the depreciation amount will be this amount minus this amount. This will be the final depreciation that we have to consider, everyone, right? So the depreciation benefits are going to be equal this value, equal this value, equal this value, and equal to this value. Okay. After TAD, we have one more thing, that is your working capital. Working capital again will be a part of your working 2. I'll come over here. I'll put down working 2, everyone. Working capital. Total requirement. So if you remember, investment will be required at year 0, 1, 2, 3, 4. Copy. Let's paste it here. Control X, Control V. 1.5 million will be required at the start of the first year, and then it will increase by 6%. So we'll require at the start of first year 1.5 million, yani 1,500. Then it will increase by how much? This will increase by 0.06 raised to the power 1. Then it will increase by this value multiplied by 1.06 raised to the power 2, everyone, right? That's how we are going to increase it. So I can just Okay, no. We'll do 1500 over here only. No, it is 1685 because I am putting power 2. That is why I am not taking the further values. Or the second method would be this value multiplied by 1 point. What is the value of, I forgot. What was the inflation over here? 6%, 1.06. You don't do anything, still it will be fine. I just multiplied this value into 1.06, this value into 1.06, and this. That's what I'm doing. Now, net requirement, everyone. Over here, it will be 1500. Then 1590 minus 1500. Then I don't need to do it every time again. I can just do the control R. Now, one more thing, everyone. Over here, at the end of year 4, I'll get all the money back. That's what the working capital actually means. I'll get everything back. So this will be the negative amount 1786. So now working capital requirement will be negative 1500, negative 90, then negative 95.4, negative 101, and then negative. Simple. Another method of doing it in a very quick manner, you just put down negative 1500 over here and then you drag it. Still you will get the same values. I actually pulled a drag over here. Okay, great. Now this part is done. Can we put down investment as well, which was 1000? What is the investment? Sorry, it was 2500. And then scrap, which was almost how much, everyone? 125. Correct. So I guess it takes care of everything that is required, right, everyone? Working capital and everything has already been considered, if I'm not wrong. Let's put down total cash flows. This amount plus this amount. Over here, taxable cash flows minus taxation plus TAD benefit. Since working capital is negative, we don't have to worry about anything else. Over here, I'll do one more thing, which is adding the scrap value. That's it. This is the net cash flows that we have. Now I'll pull down NPV, everyone. Up important point, everyone. Discounting over here will be done at what rate? 12% or 8.5? Nominal or real? Which rate are we going to use? Be quick, everyone. Let me know. We are going to use nominal or are we going to use different one? Nominal. Well done. We are going to use the nominal one. So your NPV will be equal NPV bracket open 12%, comma, the rates, the values I'll take from here. So this will be my present values. So my net present value will be equal to this amount minus this amount. So it will be a add over here. 11,980 will be the net present value of this project.